So again, to stress one thing, the types of corporations vary by legal structure. They vary depending on where you're at, which state you're residing in, or which state the corporation will be residing in. And they vary by size. The important thing to remember is make sure you choose the right corporation structure for what you're wanting to do within your business model. So the important thing to know is there's different types of corporations that range from a general or domestic C corporation, which is a closed corporation and has a private stock, to S corporations, foreign corporations, and professional corporations. And each of these has a slightly different structure. And what you want to make sure, again, is to make sure the structure you're choosing is the right one for the type of business you're going to conduct. So we'll give a little focus to S corporations, as they're a relatively new business form and it came around in the late 1980s. S corporations are recognized by the Internal Revenue Service and by most states, but not all states. The current business must exist as a corporation for you to become an S corporation. There is an application for the S corporation status. The primary reason for going from any other type of corporation to an S corporation is there are some tax benefits. So, what are the requirements for an S corporation? The corporation has to have no more than 35 shareholders. It can only have one class of stock. All the shareholders must be U.S. residents, either citizens or resident aliens. All the shareholders are individuals, so no other corporations or businesses can own stock. And the corporation operates on a calendar year financial basis. So within the S corporation, there are advantages and disadvantages. Some of the advantages include limited liability, stability of the corporation, the transfer of the ownership, there's long-term capital advantages, and the most important part is profits are taxed only as shareholders' income. Remember before when we talked about corporations, we talked about how the profits were taxed at the corporation level, and then as the dividends were paid, the individual was responsible for taxes on those dividends. Here, the profits are taxed only as the shareholders' income. The disadvantages are to an S corporation are that it's regulated as a corporation, requires frequent reporting, so there's a lot more paperwork involved. The status may be lost, so even though you apply and gain S corporation status, that status may be lost. And there's additional costs and additional difficulties to the structure of the S corporation. So there are different tax forms that are necessary for S corporations. What I would advise is taking a look at the list here and maybe going to your state tax forms. The blue link will take you to some general tax forms that may help you. And look at what tax forms are required in your state for your S corporation. We briefly discussed C corporations, and I wanted to hit on a couple of the advantages and disadvantages of the C corporations. C corporations have limited liability. They have unlimited life, which means they can continue on for a long time. They're very stable. They have an easily transferable ownership. The management of a C corporation is pretty efficient, and they have property ownership, so they can own property. The disadvantages of a C corporation include the expense and difficulty of the formation, so they're more expensive and a little bit more difficult to form. There's more government control over C corporations. There's loss of control to stockholders, so the stockholders don't have as much control over the C corporation. Taxation, again, it's double taxed. And there's a loss of flexibility in the entire structure. So as we've done with the past, we're again highlighting the different tax forms that you need for these C corporations. The blue link in the middle there will again take you to some general tax documents that you may be interested in seeing. For each state, there are different tax forms and different things you'll need to fill out. I advise you to go and explore which of those you need for your C corporation. A common thing to do is convert your C corporation to an S corporation. And this happens only when all the partners can consent to do so. So it's sought by filing a certain form with the IRS, the 2553, in accordance with the subchapter S of the IRS code. And what I would advise if you're thinking about going from a C corporation to an S corporation is to go and seek legal counsel so you do this properly and you make sure you jump through the right hoops at the right time. Again, the shareholders all have to consent to do this, and you have to file the 2553 form with the IRS. So there are differences found in the different types of corporations. Those differences exist when you talk about the taxes at the state and federal level, how the corporations compensate their officers and provide benefits for the employees, how these corporations accumulate capital, how stock and ownership is distributed, how they conduct their business activities, what is the size of the corporation, what kind of calendar and fiscal year do they operate, what kind of accounting methods are they available to use, is there a conversion from the C to an S corporation, is there a conversion from S back to a C corporation? And all these are important in understanding the different differences between the types of corporations and how they are managed and how they conduct their business.